Turn our attention then to commodities. Manisha is here with us. Manisha.
Nima, thank you so much for that. I'm looking at the crude oil prices because while we did see some profit taking yesterday in the New York session, we have seen the crude prices rebound back yet again. This is after the US has, for the first time now, sanctioned oil tanker companies which are carrying Russian crude oil, which is above the G7 price cap. Remember, G7 has put a price cap on Russian crude oil prices at $60 a barrel. And we all know that the prices have been trading above that. So while that supply from Russia should have gone down, but we do understand that some of the tankers are still carrying Russian crude oil because that is available at discounted rates to the Asian consumers. So this is the first of its sanctions now coming in for the tanker companies. Apart from that, the support also comes in as OPEC says that the global oil stocks will fall or get into a deficit by 3 million barrels per day in the fourth quarter. That is the current quarter. That is because we are looking at lower supplies coming in from OPEC and allies. But when you look at the US numbers, well, those are clearly on the bearish side. You have the production, which is now at a record 13.2 million barrels per day. Earlier record has been at 13.1, which was in March 2022. Also, when you look at 2020 rather, also when you look at the inventories in US, well, those have been surging higher as well. We've seen previous weeks see an inventory surge of 10 million barrels. So now we stand at a 424 million barrels into the US markets there. So that is what is keeping the prices in check here. Having said that, Russia says that the current oil prices have factored in the West Asia conflict. So we are pretty much in the prices there. Also, when you look at the support coming in for prices, that comes in from gasoline inventories in US, which have continued to decline, telling you that the demand there is on the positive side. So we have seen 1.3 million barrels of an inventory decline for gasoline. Same has been the case for distillates as well. Also watch out for the demand forecast for this year and the next as well. So while we talk about this year, IEA and OPEC are on same page, barely a 0.1 million barrel per day of a difference. It is the next year that there is a big gap between IEA and OPEC expectations of global demand growth. So while OPEC is quite bullish at 2.25, IEA believes that it is going to be less than a million barrel per day of a demand growth. So this is a number that we will see perhaps correcting in the days to come. Having said that, the expectation is that you could be looking at some support continuing for the crude prices. For this week now, we are up by nearly 2% for the crude.
Thank you very much for that.